May 27th, middle of the week, 5:01 p.m. Hey guys, this is Paul Lange. For those of you who are newer or don't know me, I know a lot of you have been coming to these for a long time. Can you believe it? DTS is well beyond 2.5 years. Amazing. Seems like it was just yesterday. Welcome everybody. That is the first slide kind of. This is the title slide tonight. I hope nobody's confused. This is actually the title I use for the seminar students, what I do with them 1 to 3 times every seminar cycle, every 6 weeks. We get together and have a practical application and review night. And while this is not going to be quite that intense, the concept, I think, is a very good one, and I'm surprised I didn't think to do it with all of you before. When I say all of you, of course, that's all of you in attendance tonight who are all just, members or free members at DTS, and naturally included here would be people who are in the seminar program. I asked them to attend all these because I think there's a lot of good information in here. So that's the title slide for tonight, and this is what I sent you in the email at least twice today. I don't want to disappoint, and I also want you to understand what you'll be listening to if you choose to attend tomorrow, which is today now, of course, the 27th. That was in the email yesterday. The bottom line is I want to show you the detail that goes into a single trade. I don't want to give the impression that it is hard or difficult, but it is a matter of process and trying to be as objective as possible. The level needed is one that most traders do not obtain. I like to make these, where's my little red ball? Can't proceed without the little red ball. I like to make things as simple as possible. However, the word make is a key word in that sentence. You can't just start off with things being simple. Otherwise, clearly everyone would be successful in every endeavor they attempted. You need to learn the details of what you want to do and then excel at it and then simplify it to something that you can manage. Does that make sense, everyone? I want to go over a couple preliminary things before we get to tonight's thing, kind of a little warm-up, because it's one of those lines that I walk that I'm not comfortable with sometimes, because people will say to me, geez, Paul, just keep it simple. And I agree. I agree more than anyone. Man, just keep it simple, stupid, absolutely. But you can't just, you can't keep heart surgery simple if it's your first year in medical school. You have to learn what you're doing first, and then you simplify it. So I do want things simple, but I think we all have to agree there's something to understand or to learn about trading. Trading meaning the buying and selling of anything you want, stocks, forex, the market itself, commodities, doesn't matter, over any period of time, whether it's within a single day as a day trader or over multiple weeks as a longer-term trader, right? Right, exactly, Carmen. You've heard me say that before. It's not a new topic, but I want to make it clear tonight. Understand that this is not my intent to teach you technical analysis during this 1-hour session. I don't think any reasonable person expects that is my goal. I want to show you the framework that surrounds every trade. It may not make total sense to you, but hopefully after tomorrow, after today, remember most people fail at this. So if you're going to think like most people, ... I want you to keep that in mind. I mean, I don't know what the stats are. 90% people fail, but that's, coming in. That's everybody who doesn't even try to learn it. They just come in here and throw money at an account and just do a bunch of stuff and they quit. So common sense is not something that is very useful in trading the market. I think most of you, if you've tried it at all, have come to understand that, because most people who come to trade the market are very smart people. They have money to do it and they have time to do it. And that combination is fairly rare, but yet they fail miserably most of the time because they try to use their smarts and their common sense, and it simply defies logic. And I don't want to go into the reason right now, but in a one-word sentence, it's because that the price action in the market or any stock or any forex pair or whatever is already forward discounting to a level that you can't understand, right? So it's just not, it defies common sense. That's why markets oftentimes seem to rally on bad news and bad economic data, and when good news comes out, good earnings come out, stocks fall. How can that happen? Well, that's why we look at charts, and that's why we don't try and understand fundamental things. Now, I want to just take 5 minutes, and this is for me, so bear with me. This probably is of no benefit to you. It's a benefit to me. When I do these sometimes, I always feel like I have to get something off my chest a little bit. And that is what if I were to attend an event like this and something new that I'm not familiar with, I'd always be like, okay, what's the purpose? What's he selling me? What's going on? That type of thing. And I think most of you know me, but I just want to make this clear exactly what I'm doing here. Does anybody know what this is? Advertise something for free, like a manual or a small ebook, get people to buy, get the free thing to sign up, give them your email, then pay for something small like a $9 item, and then pay for something bigger that may teach you to make money, the $300 category, maybe up to $1,000. Anybody know what this is called? Believe me, I'm not an expert at this topic, but I know what this is called. Then you find out that if you want the true secrets, then you can have them all for like a $2,500 price, right? I don't want to put any bad names to it. It's called the marketing funnel. It's called the marketing funnel in polite terms, and there's nothing wrong with it. It's everything you do everywhere in life. You see this, sign up for this and get excited. But in order to get the hype up, in order to get you to do, there's all kinds of promises made all the time, right? And you guys know me. I don't do that, and I think you all believe me. I'm here having fun doing this, and I don't have to be. I like it. I love it. I'm going to do it a while longer. And yes, I sell a seminar program for those of you who want to do it at some point. But you never hear me talk about it really. I don't bring it up. I don't have a sales slide in the middle of any of these. I've done these for 2.5 years, a couple every month. You never see that. Now, next Tuesday, I'm going to have a presentation that is called DTS Services. It's going to be just about what DTS does, both free and paid for. And if you want to attend that, you can attend that, because I don't like talking about them in between really that much at all. So I just want to make the point that when you do ever decide to take a seminar program with me, there is one fair price, and you never, ever could be charged more. There is no higher price. There is no next thing. There is no, do I have it in here? Yeah, there is no, all the stuff about, I think I put it on the slide, right? Oh, and of course, yeah, things change, so you may need to freshen up or learn new strategies for an ever-changing market. You've seen a recent email by me. I just want you to be aware that's garbage. That's just complete crap. I mean, new strategies for a new market. When did the market become a new market? I mean, sure, from time to time, we change from bullish to bearish. Things move a lot, then they don't move a lot, but that's all what you learn. It's all what you learn. And the best analogy I can give you to this, because there's this hard thing to digest, and that is a simple question: is it easy or hard to learn technical analysis? Because on one hand, with a high failure rate, people would say, boy, it must be really hard. But that failure rate is not people who have properly learned technical analysis. It's people just walk into the market and either get no practice, no understanding, no education, or maybe they get a poor education. I say right on my website at the bottom, there's a big warning. I put that there before DTS opened. I've never changed a word of it because I just like the imperfections that are there, whatever's there, it's perfect. But it actually warns you that most people, when they get an education, they lose money faster. Because either the education is not up to speed or the person learning it is not up to speed and they just really don't understand what they're trying to learn. So I give you lots of warnings about this. But bottom line, it is very doable. So what is this comparable to? Here's the analogy that I really love. Is it hard to learn to read charts? Here's the best analogy I have, and I like it a lot. Is it hard to learn French if you're not from France? Or pick your country. Don't want to pick on the French, but answer me. Is it hard to learn French if you're not from France? Is it? I'm talking about an adult. Anybody listening to me? You've never been to France. You don't know French. You're going to go there on vacation. You need to learn it. Is it hard? Well, if it's hard to learn French, how come there are about 1.6 million kids under the age of 3 that can speak French? You ever think about that? I mean, does it take great brain power to learn French? Does it take incredible ability and talent? You understand what I'm saying? Compared to me. Thanks, Charles. I suppose that's true, yes. At least it's one of the Latin. But do you understand what I'm saying, though? It's the perspective of where you're coming from, right? How many kids in this country are bilingual at age 5? Yes, a lot. A lot of kids bilingual at age 5, right? So it comes back to the question, is it hard to learn French? And on one hand, you could say, well, yeah, gee, it's hard. It's not hard. It just takes practice and repetition. Agreed? And this is why I like this analogy, because you don't have to be super smart to learn to read charts. Not at all. But you know what you have to do? Show off, Craig. I picked French because I only know 2 French words, and that way I wouldn't be tempted to try and speak French, because if you picked another language, I know a little bit, so I might try to embarrass myself. But I know oui, oui, and monsieur. I can't even say it. I can't even say the word for Mr. But think about this. How much brain power does it take? Not a lot, right? There are 3-year-olds walking around that can speak French. What education is needed? Well, none. 3-year-olds speak French, right? Could you learn French this weekend? Guys, could you learn French this weekend? I'm going to keep the analogy going for 3 more minutes, because I think this answers a question I get all the time about, why is this so hard? It's not hard. But you do have to learn it, right? Well, if I wanted to go to France for vacation, could I not learn enough French this weekend to get around? Right? If over a month, if you learn French and visited France, right? Right, exactly, Eric. Exactly, in that order, yes. You're able to walk around. I almost put that exactly on the slide. You're able to walk around, order food, find hotels, etc. You may feel pretty good about your new language, right? And maybe you studied for 2 weeks, and you feel, wow, I can make it around in French. But do you really know French? And obviously, hopefully you're drawing the comparison here, at least in my mind, to people who go out and read a book or 2 about technical analysis and think they know it. But here's the question for do you know French is, would you, at this point, how would you do in a business meeting that was all in French? Would you trust your company's future to your French language after knowing it for a weekend, 2 weeks, a month, 2 months? You get the analogy, right? And that's what it is in a sense, right? It's just a matter of really learning it, practice, and repetition. You spin trains? You can only, well, that's TJ, because that's what you're trying to order the beer in Germany. See, if you go to Germany, you got to learn German. You can't learn Spanish to go to Germany. That's your problem. You should have consulted me earlier. Okay, so, and then, do you know French as well as the 5th grader that was born in France, right? Even if you spend 3 months learning French, if you spend 6 months learning French, you're an intelligent, well-educated person. 6 months you work at something and you don't know the language as well as a 5th grader who lives there, right? So I think reading a chart, learning the language of charts, which is one of the reasons I picked that as my cliche, if you will, learning the language of charts to me, is very similar to this. And once you learn the language of charts, there is no such thing as things change and relearn this and relearn that. It's like relearning French. I think I put that in a recent article I wrote, didn't I? Like if there was a typhoon or something that went through France, you wouldn't have to relearn French. You just still keep speaking French. You're just saying different things. So anyways, hopefully that makes some points. So here is what we're going to do tonight. This was sent to you. You could have read this. That's a good point, Sven. That's right. These days, you could almost make your way around with Google, OK Google or Alexa. Yeah. So what I want to do here is go through, and before I show you, I'm going to show you 3 real trades from the last 2 days, and I just want to give you the detail of what exactly I do when I look back and evaluate a trade. And it may be shocking to some of you. It may be absolutely shocking to hear me describe a trade in the way that I'm going to. But let me do something else first. And this is not a real trade. This is about finding the moment. And this really came to me just as I started writing this. What a great thing this would be to do. I do this in the room frequently, right? So every once in a while, we'll hit a moment in the market, and I'll go, you know what? That there, right there. See that 5-minute high at 10:30? That might be the high in the market for the next 3 months, right? In the room. You ever hear me say that? And I'm not saying I don't even keep track. I may not be right about it a lot, but have you ever heard me say that, guys in the room? Right? It's not very often, but I'll just pick this moment and say, you know what? Right here, that could be the high for the next 3 months in the market. And recently, I was exactly right. I took you back and showed it. But the point is, it's not that necessarily that's what your goal is supposed to be. And I'm not even saying that, it's not even how you trade. But I think it's fascinating to find out, to kind of go back to, if you will, the birth of the universe. And to say, on any move, do you realize that you can, through proper technical concepts, actually find the creation of that move? And I don't mean just because you're going backwards in time. Sure, any dummy could go back and point at a chart and say, there's the low. I mean, you can oftentimes legitimately find a concept that if you were sitting there at that moment, you could look around and you say, you know what? That could be the low for the next 6 months. So let me show you that with NVIDIA. And by the way, I looked at 3 stocks, just to be honest with you. I looked at 3 stocks before I picked NVIDIA. And I wouldn't have had to look at 3 except for the fact that because of this big crunch that we had, I wanted to find something that wasn't like at new lows or something for the last 3 years. So here's the question. Here's an NVIDIA weekly chart. This is the weekly chart. NVIDIA is one of the rare stocks that flew past the prior highs, very strong stock, went way up here. This is the low from the coronavirus dip, right? That was the bottom. And the question is, could you actually come inside this tail here and find legitimate concepts where you could say there was a day, there was a moment in time right here where that could be the low for the next 6 months or whatever it is, 3 months. What are we? How long ago is that? Weekly chart, 1, 2, 3, 4, 5, 6, yeah, 3 months. And the answer is yes, right? Could you find it in a fully justified and reproducible way using the rules, at least the rules that I teach of technical analysis? So number one, the weekly chart itself. Does the weekly chart allow you, and again, I'm going to keep repeating this because it may be a little confusing here. The question is, when you were in the bottom of this tail and you looked around, could you legitimately justify saying that there is a moment here on a small time frame where you could go long and be justified to be long for the next 6 months, 3 months? And the first question is, the weekly chart you're on, would it allow the trade? Does the weekly chart say that this is a possibility? And the answer to that question is yes. By the way, I'm going to start asking you guys some questions in a minute. But, well, let me ask you now. Why does the weekly chart justify that? For some of you who know, and you really only have to know some basics about technical analysis here, but why does the weekly chart say thumbs up? I should add a little thumbs up slide in here, right here. Thumbs up. Why does the weekly chart say thumbs up? I'm okay with a long in this area, right? Stephen, exactly. Minor support. We fall into, you don't see the chart? Guys, do you see a chart, weekly chart of NVIDIA right now? Yes, okay. Jason, I'm sorry, you might want to just try logging in again, because if it's only you, there's not much I can do. Okay, we got charts and I think we're good. Thanks, guys. All right, so minor support, and by the way, minor support is the strongest form of support, generally speaking. It depends on what purpose you're using it for, but so we have the strongest form of support sitting here. So now the problem is, do you just back up the truck and go long here because the weekly chart hit an area? And the answer to that question is no, never. And little magic moment here, little listen carefully moment. To me, one of the biggest problems I find with newer traders is that they're looking for some magic area. And it's just like, you just buy that area. And that's why they think technical analysis doesn't work. You broke that support area. You did this, you did that. That number didn't hold. And these are all flawed concepts. It's not how it works. This is an area. It's like a big hand grenade, like that blue circle. There's a big hand grenade here. And you don't just buy the area. You say, here is an area, I call them focal areas. Now, if the trade goes bad, you call them fecal areas, but until they go bad, they're focal areas. They're areas of interest where you want to see something happen to prove your bias. You have a hypothesis. You're thinking, hey, this should hold. But let the chart prove it to me. I'm not just going to jump in because it doesn't always work. Let me prove my hypothesis, all right? We good so far? Are you with me? Weekly chart? All right. Zooming down to the daily chart, okay? This little circle here, this is like middle of March, right? I'm going to back up again. That's the weekly chart here. That's the middle of March. You can't see it very well on a weekly chart, but that's the middle of March. That tail, that circle, let's just come down to a daily chart. Boom, there's the daily chart. There it is right there, okay? Is it justified to come in and use the daily chart? Is there any rule that governs that? Well, actually, there is. if you're looking at a weekly chart, you may come down a time frame and look at that time frame below to find a complementary strategic concept. Boy, that's a lot of words, isn't it? Well, I'm not just making them up. Matter of fact, here's a little excerpt right from the manual. I did this in a circle to be cute, but it cuts off some of the words. But going the other way, when I find this setup, on my time frame of reference, the 15. Now, this is referring to two. It's using an example using the 15 and the 5. But we're using here a daily and a weekly. I choose to zoom down one time frame and find a zoom down complementary entry on the time frame lower. So right here, here's rules that I follow that say, yes, I can come down to the daily chart and say that this is still legitimate to try and use this daily chart as the focal point for an entry. So it means that if you wanted to use the daily buy setup, it's happening in this general area on the weekly chart. Once we're here, it means that the daily chart can be used as a substituted buy setup. Now, I don't really like buy setups. They're not very reliable. So then there's another concept we have, and that is to say, once we're now in this area, could we even find a more focal area, a more zoomed down area? Enter the 60-minute chart. Now again, this is the low right there on the 18th, right? Let me go back to the daily. That's the 18th, okay? And that is the weekly bottoming tail. So inside the weekly tail, we're inside the daily. The daily has a bottoming tail, and inside that daily bottoming tail is right here, okay? So could I now use my hourly chart to enter right here? Could I do that, everybody? Can I come now down to the hourly chart, 2 time frames lower, and say, okay, let's just zoom way down here? Kind of a tricky question. The answer is, oh, if you're in a seminar program and you got this wrong, I'm going to take your name and kick butt. No, you cannot. You are not allowed. You cannot use a complementary entry 2 time frames lower. And I know, please understand, go back to my first few minutes. I'm not here to teach you tonight, so you don't necessarily have to understand this, but you cannot do that. It's not accurate enough. You can't come down 2 time frames and just say anytime something turns green, you're going to buy it. You'll lose your butt all the time. What do we have to use, Carmen? Thank you. We need a secondary sign of strength. And the best type of secondary sign of strength is what, everybody? Again, I'm showing you the structure of a trade. A lot of you won't know the answer to this question, but what is the best type of secondary sign of strength? Right? Is it opposite bias pattern failure? In other words, the failure of this downtrend, right? So guess what we have here? We have an hourly chart that's falling. And when the hourly chart breaks its downtrend, when the hourly chart breaks its downtrend, that now gives me some better confirmation. Now in this case, because of this exact setup, the way the hourly chart broke its pivot, it hadn't really broken a downtrend quote-unquote line yet. So I would wait for the next transitional buy setup on the hourly chart, which is right here. So we're waiting 2 days later to right here. Boom. Now let's come inside that hourly chart and look at this here. So now we're 2 days later on the 23rd, and we're going to come down to a 5-minute chart. Boom. There's the low of the 23rd, right? Just to review, that right there, come down to a 5-minute chart. There's the low right there. Again, we can't come down and use the buy setup on the 5. But we put in a higher low, and then we have a sell setup failure, and boom, there's your entry right there. So this is as far down as I would take it in all reasonable aspects. You could go to a 1-minute chart if you want to go off the chart bananas. But my point is, if you were sitting here on the 23rd and you saw this 5-minute chart like this, forming a higher low, a sell setup failure, inside of that hourly chart, boom, 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 inside of that daily chart, inside of that weekly chart, you could literally say to yourself, and maybe even do it on some days, that little 5-minute entry is literally the entry that could be the low for months to come. Now, did that make sense, everybody? And I'm not telling you this is how you trade. I'm not telling you this is what I did. I'm not telling you this is, but my point is you actually can find the moment of birth to any move. And a lot of the times it's a legitimate, strategically borne out concept that I would trade every day. I think that's amazing. Now, it's not always the case. I mean, obviously there's always a bottom that started to move, but sometimes it just happens. And you look around and you say, okay, I don't have any concept. Sometimes things just flip around and you're like, oh, okay, well, that's nice, but I had nothing to do with that. But amazingly, that happens a lot. Okay, so maybe it's just me, but I thought this is really a cool thing to show you. Let me know if you liked it or if you thought it was boring. Because in a sense, it's what I try and do every trade, in a sense. Not necessarily to find a 5-minute entry on a monthly chart, but I mean to come down and find that moment in time where something on a bigger time frame, because my whole concept of trading is whatever time frames you're on, is to use the power of the bigger time frame to get the move, and then to have the knowledge and skill to come down to a smaller time frame to find that kind of quasi-perfect entry. Did that make sense, or do you want me to repeat that? If you were to summarize my big picture, what I try and do, it's to use the power of a big time frame to capture a big move. And again, I'm not saying I ever did this chart. I'm just showing you an example. I try and find a big time frame. Everything I do is always justified on a big time frame to get a big potential move, yet come down to a small time frame to at least think that I have the knowledge and skill to find the moment of transition on a smaller time frame that's going to ignite the bigger move in the bigger time frame. Then it gives you that combination of an above average move with, I don't want to ever use the word small stop because that's like a swear word to me. It's one of the worst things you can do. But to find a focal area of great importance from which a big move could develop, giving you a good, end of the day, either success ratio or batting average, depending upon how you want to do it. Okay? Questions before I go on, or comments? We're actually going to be done on time tonight, I think, because I have 3 trades I want you to look at. One, great strategy, great entry, but not my type of entry, but I did it anyhow. And then I have a second one that emphasizes the key word that I like to use in all my trading. And a third one that's a losing trade. I want to show you a losing trade, and I want to show you why I have to call it kind of a bad trade. It happened today. These are all from today and yesterday. And again, I always try and pick trades from the last couple days whenever I do this. We were closed Monday. When I first set up the presentation for tonight on a Wednesday, I'm thinking, okay, I have 2 days of trading, and then we're closed Monday. I would have set this for Thursday if I knew we were closed Monday. I didn't think of that, so I just had yesterday, so I threw today's trades in there too. But you know what? In a sense, it's kind of better because while on one hand, if I were to go back in time, sure, I could pick out these great examples of things from 2 weeks ago and whatever. But you know what's even better is to say, look, here's what happens every day, right? And this is what we have to deal with every day. Here's what happened. Here's what I did. Because I think if you do the tours and look at other presentations, you get overwhelmed with these fantastic trades that happened in the summer of 1937 and, blah, blah, blah. And it's all well and good. Everybody has some good trades, but, it's not the norm every day. Every day, to me, should be boring. It should be boring, make your money as a day trader, go to the next day. That's what it should be, right? Any questions? Nothing so far? All right. Now, I'm going to show you the exact layout that I use when I do this for the seminar students. This is a 4-pack of charts, and they're partially covered up right now. This is the daily chart. Now, this is going to be PE. This is FITB, which is Fifth Third Bank. I call it FitBoy. So here is from yesterday. This is from yesterday. This is Fifth Third Bank. I call it FitBoy. FitBoy and I go way back. It's one of these stocks that I don't want to say never, but I mean, I don't know why. We just get along. Just every time I trade FitBoy, we have good results. Not sure why. This was yesterday. So the daily chart you're seeing does not include today's bar. That is what the daily chart looked like yesterday at close after the trade. Now, in the hourly chart, I've covered up yesterday. Okay, so you're not seeing the trade yet. The 5-minute chart, I've covered up part of yesterday. So you're seeing up to where I took my entry. The 1-minute chart, you're seeing up to where I took my entry. Okay, so this strategy here was based on a gap. So in terms of, again, the point of tonight is structure, showing you the detail goes into it. When I look at a gapping stock, it is different than the rest of the world. you can't look at a gapping stock under normal technical analysis concepts. Why? Because it didn't trade from here to here. It teleported from here to here. It used 0 buyers to get from here to here. So it changes the dynamics of what happens sometimes. Not always, but sometimes. So I have a gapping system that I use that ends up looking at 5 different aspects, giving a 10-point quality rating. So it actually I could actually give you a number that this gap rated. It wouldn't mean anything to you because you don't know the numbers necessarily. And it's not that I'm trying to say, gee, you're so detailed that, oh, this is a 41-point gap or a 40, which is it. It's not like that. Nothing is that detailed or precise. It's kind of like throwing a little hand grenade. But just generally speaking, how strong is this gap? How urgent is the entry? How much do you trust it? Are the questions that you want to get from your gap analysis? So this is what I call a tier 2 gap, meaning that it's a very good gap and actually could have been entered very early in the day. Now, if you take a look, I'm going to expose here the 60-minute chart. You can see on the 60 and the 5, you could have jumped in this immediately at the open. You would have been great. Guess what? I kind of wanted to. This was, right, those of you in the room, there's people in the room here with me. If I tell a lie, right on the screen, Paul, you're a liar. But I had this on the screen yesterday morning, one of the ones that I wanted to get, ASAP. I couldn't get into it. It just flew. I mean, I could have. I don't mean I say I couldn't physically. It just flew. It just flew, and it wasn't in the category that I was going to jump in blind. So this first move happened without me. I went on and looked at other things, did other things. And then what happened was we get this little move here. Once we took out this high, this is what I call a power trend move. They're fairly rare, very hard to define. The definition is that it actually gives no setups for entry on the time frame you're looking at. A 5-minute chart in a power trend means it is grinding so tight, so precise, and it's a very, very bullish or bearish, going the other way, sign, because it means nobody is allowed to take profits. I mean, they take profits, but as soon as somebody sells, there's people here just biting at it. Just every time somebody tries to make a dip, there's new buyers, new buyers, new buyers, and you get this very, very tight pattern. I recognized this and ended up saying, and by the way, the numbers are down there. Right here, 11:40 was the time of entry. You can go look at your own charts. This is yesterday if you want to. Fitboy long entry over 1905. So at some point I looked over and said, you know what, I need Fitboy. So the next time it takes a dip, I'm going to jump in. Well, there's the 5-minute entry is right there at 11:40. And actually there's the 1-minute entry right there. So at some point I see this. Now I never get in something like this up here, never. I always wait for this, a little pullback, shakeout, whatever it is. So it actually turned out to be kind of a little 1-minute buy setup. So I got in right here. Now, if I would have actually used a tight stop on this would have made about triple the money that it did. I opted for actually too wide of a stop. The mistake in this trade was I really threw the stop down there with the intent to add to it, and I never ended up adding to it. So it ended up being not as profitable as it should have been. But this is the entry for this. Now, I always distinguish strategies, which I call the picture of power. Why do you want to get long or short? Why do you think it's going to move? How much is it going to move? I always distinguish the strategy from the entry. To me, they're separate things. If you're learning strategies that have an entry to them, they're probably not the best things. So there's different entries you can use. There's different tools you can use. So that was the entry to this. So I would rate this an excellent analysis of the situation, of the gap. An excellent entry. This is an excellent entry to me. I gave it too much room and I didn't add to it. That was a mistake. It should have been more profitable. And also perhaps I could have been a little more aggressive with it and gotten in the opening minute. I did that on the next trade we're going to see, but I didn't do it on this one. Okay? Let me look at my comments here that I wrote for myself. Oh, yeah, on the exact points thing. See, people get all hung up, on the points. When I teach class, I'm sure that as we go through the charts, I probably am from class to class. I may change my rating by a couple points out of 50. It's just very possible because that's not really the important thing. There's so many other things that go into the trade. Besides getting a rating on the gap, you have to decide other things, such as What entry are you going to use? What time is it? The market timing, the market relative strength or weakness, reversal times. All these things come together to make a trade for you. Is that a lot of stuff to remember? Well, if you don't know French, saying how do you go to the bathroom, it's a lot of words to remember. Or where do you go to the bathroom, or where's the bathroom? It's a lot of words to remember. But it's not hard for any 4-year-old that lives in France. It just comes to be part of what you do. So, good trade all around, showing you the detail of what it is I like to do. Some frequent comments that I hear. First of all, I want to say, I am not one of those people that says my way or the highway. There's a lot of ways to make money. And I respect anybody that makes money consistently, as long as it's over time. Everybody makes money for a couple months, and then they fade away into the sunset. Over time, prove it to me. Prove it to me that you can do it in a couple different market environments and last. Show me you can reproduce it. You're not just out taking wild stabs at stuff you don't even know what you're doing. But there's some common things people say that generally are just novice comments to me. And the reason I said this is because I don't want to insult anybody who makes money if you say these things. But I just want to point out that I think a lot of novice people say these comments, and it just baffles me why, because none of these comments are attractive to me. Look at stock XYZ. It's really heavily traded today. Okay, so what? How do you make money because it's heavily traded? What does that mean? It's heavily traded. Is that a good thing or a bad thing? XYZ is where all the action is today. What does that mean, all the action? You know what? I don't want to be where the action is. You know what I want to do? What do I want to do during the day? What do you want to do during the day? You want to be where the action is, like you're at some nightclub? What do you want to do when you're trading? Make money. Want to make money. Yes, I want to make money. To me, where the action is more difficult to make money. But people say, Paul, this stock is volatile. This $20 stock, it moves $6 in one day. Okay, so what? You know what you have to do? If it moves $6 in one day, your stop is going to be proportional, right? It's about making R's, like Jack said. It's about making risk units, right? A $6 move with a $3 stop makes no more money than a 30-cent move with a 15-cent stop, as long as you can get the share size you need, right? And there's another thing. You know what you have? You know what you don't have? Even if you make $6 with a $3 stop compared to 30 cents with a 15-cent stop, you know what you don't have with the wild crazy stock? You don't have precision. You don't have precision. In other words, the wild crazy sloppy stock is more likely, especially if you're a newer trader, to take you out. True, everyone? It's just common sense. Is that true? You agree? This isn't vast trading skill. This is just simply the sun rises in the east. We can all accept that fact. But for some reason, people are drawn to this stuff. You got to trade Bitcoin. Really, why? Why do I have to trade Bitcoin? It's one thing. It's a chart. It's no different than any other chart. Got to trade the VIX. Why do I have to trade the VIX? Do you know that the VIX is 99% of the time just the opposite of the market? And again, it's just a chart. It's sometimes useful, occasionally useful in analyzing the market. The VIX is not a technical indicator. The VIX is its own unique additional piece of technical information, so it's okay to use. Nothing great about trading the VIX. And again, if you do it and you make money, that's great. I'm not knocking anybody who does it. I'm just saying, if you're not making money and you think, oh, gee, I got to go trade this, the instrument doesn't matter. It doesn't matter. If you don't know how to trade a chart, it doesn't matter if you're trading a chart of Baidu or Baba or Qualcomm or the Qs or the VIX or a Forex pair or cotton futures, right? Can everyone agree to that as well? Can we all agree to that? If you can't trade a chart, or tulips, yeah. I think we have our own tulip thing going on these days, right? So, again, one of the big loser comments that you hear is, well, you know, I'm not doing well trading stocks. I think I'm going to go try Bitcoin. Really? Really? Okay, you give me an email in a couple months, let me know how you're doing. So why all that? Because the bottom line of that was what I like, and again, this is not in the category that you have to listen to me or believe me or agree with me, but I like precision. I like boring precision. Here's an example of precision today, this morning, PE. Oh, by the way, let me back up to some I didn't cover. On FITB, something that I'm surprised one you didn't ask, which is, Paul, there's probably 2,000 stocks that you could look at on a swing trading basis. There's probably 1,000 stocks you could look at on a day trading basis. There's probably 400 stocks you could look at during the opening half hour. How did this get on your screen? Well, I kind of told you this already. This got on my screen because it was on the gap list. It was gapping. And when I looked at the gap, and again, there's hundreds of stocks gap these days every day, but the pattern plus the gap made me say, hey, that rings a bell with the strategy I know, with the concept I know. That gives me good odds. So fast forward here to this one and remind me to tell you where I got this from. This is PE. Again, so here's the daily chart, and this is today. So here's how it looked whenever I captured the chart. It was probably before we closed. Yeah, it was definitely before we closed. Here is the hourly chart. Now, this is the stuff I look for as a day trader. And to you, it may not mean anything, and it doesn't have to. We all find our spots that we like. But this is what I call a wall. This is a wall. The whole daily chart has a wall here. And it's happening underneath an area where the stock gapped up and sold off and never returned to that area again. Somebody tell me, just common sense, what does this daily chart tell you? I don't need any super technical answers. Just it's your first day in the market and you know what a chart is good enough to know what that means. Just to understand that it's a price. What is it? Does that tell you anything, anybody? Right. Well, it's kind of what I just said. If it breaks up, it'll keep going, yeah, but there's a wall there. And that's the thing, Jordy, that's interesting is, a lot of things you look at two different ways. You can say, you know what, someday when this thing breaks over this wall, it's going to go higher. It may very well do that, right? But until it does that, the fact that this day here, it gapped up and sold off, what's interesting to me is it never returned to the midpoint of that day. In other words, the excitement, when this stock gapped up this day, here's the question I'm trying to get at. Just from common sense, no technical skills needed at all. When this stock gapped up this day, were there more people who wanted to sell and take profits from this move, or more people who wanted to buy it because it's some kind of breakout? What's the answer to that question? The day the stock gapped up, are there more people that wanted to take profits from the move up, or go long as some kind of a new breakout or something? Profit takers. And you know what? It's not one day. I understand a day of profit taking. That's fine. But profit taking, come back, hit this wall again, profit taking, just refuse to go, right? Now, if we gapped over this tomorrow, I'd be bullish on it. It wouldn't surprise me if I went on vacation for 2 weeks and came back. If it was way up here, I wouldn't be surprised. But you know what? Until you get over that wall, you know what I want to do? I want to short the wall. Does that make sense? See, so many people, and most of your answers, by the way, just as a point of view, most of your answers were, I see the home run, right? Isn't that what most of you said? I see the home run, Paul. It's consolidating at resistance. Boy, when it gets over that, look out. Yeah, okay. Yeah, when it gets over that, that might be in June. It might be in 2022. It may be next week, Thursday. I don't know. But here's what I want to do. I want to short this when it gets up in this area. I want it to prove me wrong. Does that make sense? And again, this is partly combining just words from the English language and technical analysis from how I know it and how I teach it. So when we gap up into here, to me, this is that beautiful little moment in time. And this trade was entered the opening minute of the day. This is today. This is enter the opening minute of the day. This is a very liquid stock. It has to be. PE does 10, 12 million shares a day. And it ran up here, and it made this little tail. And as soon as I started to make a tail, boom, I was in short. Boom, boom, boom. Entry 967, under 968. I threw the stop up where this stock would have to, look at it this way, in order for me to be wrong and stop out, this stock would have had to have broken a 1 month consolidation. Where are the odds? What bet do you want to take? Do you want to take the bet that today's the day we break a 1 month consolidation, or it's yet another day of failure? Do you see where I'm coming from? And because of the precision, it's not even a failed breakout. We're getting too fancy with the terms, Fabio. It's just a big, it wasn't a failed breakout, it's just a big resistance area. It never broke out. So the cool thing is when you get in here, again, at the birth of the universe, when you get in right at the birth, guess what? You're making a lot of money down here. Now you start talking about waiting too long and you can't make money. So I end up taking some profit here. I lowered the stop here. I'm sorry, this is a 5-minute chart. Go to the 1-minute chart. Boom. Took some money, lowered the stop, took some more money, was done. Ended up going a little bit lower. But that is what I call precision. Right, Fire Tower, I agree. It gapped into resistance. It didn't break out of anything to me. Clearing some number by a penny is not a breakout. And what I really liked about this, as a matter of fact, here, let me ask you a question here. This is a very technical point. But whether or not this gap cleared this bar by a penny or 2 pennies or didn't clear it by a nickel, what is, and I'm going to use a multiple here, what is 20 times more important than that? Can anybody show me in this chart what is 20 times more important than whether or not we cleared some little number by a penny or 2 pennies or 3 pennies at 9.30.05 in the morning? David, beautiful. 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 How it got there. Thank you, Carmen. Exactly. How did it get there? We had this big run. I know we had this gap up in here, but we had this big run from down here over 2 days that landed us back at a resistance area. So the stock is exhausted at resistance. That's what I want to see. This is a little flawed because of that gap there, but I don't want to see a new breakout. In other words, I don't want to see this, tomorrow, if we gap over this bar, guess what? I'm bullish. Because that would be a shock move, a new move higher. It wouldn't be up, and then gap into resistance. Anything's going to fall, okay? So that is PE. I have no precision. I have no specific comments other than, to me, this is what I call precision. Kind of my favorite thing to do. You don't find it every single day. Here is another trade from today, and this is ZM. I shorted ZM on what I called here a gap down and then a 15-minute sell setup. So here's the 15-minute chart isn't on here, but here's the 60-minute chart. I wanted to short it. And what I did was I didn't love this one. I think I was a little anxious to get something on the short side this afternoon, which turned out to be not the thing to be doing anyhow. I let this break down to here, consolidate, and then I wanted to take it short underneath this, so kind of a little secondary breakdown, right like that. And that's where I got short. There's the 1-minute chart. That's where I got short. This one did not work. I gave it a lot of room to the top side, and I ended up just stopping out of it. I have 1, 2, 3 problems with this trade. There's 3 problems with this trade where, looking back at it, I'm going to say this is not a good trade. This is from today. Anybody want to guess what the 3 problems are? 3 things that, again, what's the point of today? It's showing you a framework in which I operate, the rules, the concepts, the strategies, how they overlap, how they make good trades, and how sometimes, if you get a little clouded during the day, sometimes you make a wrong decision. You got to, acknowledge it, rectify it, try not to do it the next time. What are the 3 things? All right, Steve, good point. That is the third thing that was in my mind. The third thing was the market never really rolled over today. I was looking for something for when the market rolled, and the market never rolled. It just, I didn't rely on some complementary move by the market. I didn't have a 5-minute break of trend. I didn't have anything to hang my head on. So that's number 1. Number 2, the daily chart is correct. The daily chart uptrend is challenged, Leo, so I don't want to necessarily call it an uptrend, but it is still, let's just say, a strong stock that ready at 3 days down. And that is something I would normally negate. In other words, when I look at taking this trade, the daily chart has to be complementary to the trade, and it was not. The daily chart actually negated this trade. So this was a poorly entered trade. And number 3, Price below MA 200 MA on the 5. Well, I'm shorting it, Sven, so I suppose being below would have been a good thing, but I really could care less about that. The third thing was the extension on the hourly chart, and most of you should have known this, because another thing I will fault anybody for is picking up something that had that dramatic of a drop from one day to the next. The setup, the cell setup that follows is not going to be reliable. Yeah. Anytime you short something, Sven, this price is rising on some time frame. So that's not really the issue. Any sell setup you take, the price is rising into the sell setup. Any buy setup you take. You're always looking for that change of trend on a bigger time frame. But it's just the fact that this is not, so this is not really set up properly on the hourly chart or the daily chart negated it. And I tried to make up for that by getting a really, really good entry. But if you have a good entry to just a piece of garbage trade, it's still not going to work. Okay? There is a ton of free stuff at DTS. And I provide that for you. I think the DTS free stuff page has more great information than anywhere. I know there's sites where you can get definitions and routine blah, blah, blah comments. But this is, I think, where I've had more and more people tell me I spent the whole weekend looking at the free stuff page. I listened to half the videos already. It's a great spot to be, and it's there because some of you simply are not ready to pursue this on your own, want to try to learn it on your own, or want to supplement to what you already know, and that's why it's there. For those of you who maybe don't even know it, there are 3 things that are offered at DTS that you pay for. And I'm going to talk about those next Tuesday if you want to come join me. Now, you'll get an email about this. It'll clearly say this is not an educational event. Don't show up if you have no interest. But I'm going to talk to you about the seminar program, exactly what it is, the pros and cons of taking the seminar program. I will also talk to you about the 2 letters very quickly, and also about the trading room for those of you, because the trading room and letters are ways to kind of get the fish. And naturally, the seminar program is a way to learn how to fish using the age-old analogy. Okay? Thank you, Fire Tower. I do appreciate that, as always. So let me ask you if there's any questions. We're actually going to be done at 3 minutes to 6, which is probably the first time I can say that in a long, long time. I've been leading this in every presentation because people keep saying they never heard me talk about it. For those of you who want money to day trade, there is a proprietary trading concept where you can get 10-to-1 leverage and you don't have to worry about the rules of the pattern day trader rule. It's safe and secure. It's not something I am a part of. It's something I refer you to. Email me if you have interest in that. There's no catch. There's nothing. It's just very straightforward. I've had 100% positive comments about this. And it's something where for $5,000 you can trade $50,000 worth of equity, and you can be doing it in a couple of days, and there's no hoops and there's no levels. It's just simply trading your own money. Thanks, Bob. Any questions, anybody? Great lecture. Thanks, guys. Thanks.